and then each one you should be able to see
Yeah,
the go
we
live.
got it. Yeah, yeah, that's what happened the last few times. Mhm. Am I sitting higher than you? Yes, I am. Sitting higher than you or something. Yeah. Okay. 701. So we're live. Hey, good evening, everyone.
Yes.
Yes, good evening, everyone. Have you been thinking about buying a home? Because join our live home buying webinar tonight, streamed across multiple platforms, where we will cover the essential steps, of the home buying process. We want you to learn about financing options, about budgeting, mortgages, making an offer, and what to expect at closing, because we've covered a lot of those in the last few weeks. Whether you're a first time home buyer or you're looking to refresh your knowledge, this session today will, provide practical insights and answer your questions live. So you can join us now. Okay, go ahead, Saul. My name is
Hello.
Soraya. Okay, I'm introducing myself as Soraya Machado-Powell, and I'm a realtor for Villa Home. For the last 35 years, I've been a realtor. So my partner is.
This is Saul with CC Financial, out here in the city of Long Beach. Been doing this for the last 5 years, trying to help everyone in this current economy, this current market. There is still people that are looking to buy, looking to get information to accomplish their goals, and that's the biggest thing. Why we're here right now is to share knowledge, put you guys on game regarding current economy, regarding different programs that are out there, and different steps on how we can accomplish you guys' goals. Um, but give me one second. I'm going live real quick on Instagram. Perfect. Yes. All right, we're on live as well. But let's get into it. So right. Before we go into regarding this forgivable grant programs, the biggest thing right now is the economy. Is it a
Oh,
good time
yes.
to buy?
Yes, yes, yes.
Are interest rates dropping? Are they increasing? What is going on right now? Right now, at the moment, the new Fed chairman Kevin Warsh is was directed by chosen by the Senate and by Trump to one reduce rates. Right now, at the moment, he is going the opposite way, saying that there may be interest hikes, but according to the current market right now in the last 6 months, there has been very volatile, meaning it's been going up and down. But based on the reports that have been coming out these last couple of days, these last couple of weeks, it does look like rates are on going on to the decline. Maybe in the next 2 3 months, it will decrease even more.
Um,
Soraya, is there something that you want
Yeah,
to add?
we're not saying that we have a crystal ball, okay, and we can't predict it, okay, but it's looking as if it's going to be going in a positive, direction, and we're hopeful that that would happen so that, more of you would be able to have this hope and dream of getting this home. Yes.
Most definitely, most definitely. And the biggest concern is that the interest rates, for most people, and there's different programs, different out there that we're gonna talk about today, um, that play a huge factor for you guys when it comes to purchasing a home.
Yes.
But yes, let's go into this forgivable grant. So this new forgivable grant that we have, it can cover for FHA or conventional. With FHA, you can go up to 3.5% down, and then with conventional, you can go from 1% to 3% for that grant, depending on where you guys stand on our DU system. What is a DU system? So essentially, it's a desktop underwriting system that we have on our end. It's where we submit your guys' file into an underwriting process, and essentially, it's an automation. think of it more like an AI system that reviews your overall credit score, credit report, your income portion, assets as well to see if you guys are able to qualify.
Hey, do they need to be first-time home buyers to be able to qualify for this?
That's a great question. No, they don't have to be a first-time buyer. So let's just say we have one person that's already have purchased a home in the past, and they sold it as well, and they want to reapply for a new home. They can most definitely go ahead and apply for this grant and see if they're able to qualify, going FHA or conventional. The good thing with these type of these two programs is that you can buy up to 2 units on FHA, and then with conventional you can go up to 4 units for this type of program. So
Okay.
essentially, it is going to cover that down payment for you guys, and you won't have to pay it back at all. So this is free money for you guys. For you
Free
guys,
money.
yes.
Yeah.
There is closing cost side. Obviously that's between 2 to 3% of the purchase price, but most definitely we can negotiate that on Soraya's end, or we can always find another grant as well that can help on that portion.
Yeah. What does the FICO score need to look like? So
So yeah, for FHA, the minimum FICO score would be a 640, and then for conventional, a 620. Keep in
oh, okay.
mind, the stronger our FICO scores are, the higher the chance we're able to qualify and obtain better terms on the interest rate, which is going to help out as well on you guys' monthly payment.
Okay. Sounds
Yes,
good. Love that program.
most definitely.
Free money. hmm
Free money, guys.
Yeah. Now
uh,
this one I love.
Most of this is one of the new programs that we have released. It's very popular right now. It's the 100% doctor financing. So anyone that has graduated from college recently or has started, their medical residency at a hospital or an internship above with one of these degrees, then at that point they can qualify and apply for this program. It is 100% financing. You don't have to pay anything back regarding the down payment, just because they are financing the whole entire loan for you. Um, great, great program. There's no mortgage insurance, meaning you're not going to be paying on a monthly basis MI, such as unlike your FHA program where you have mortgage insurance for the entirety of the loan. And then with a regular conventional program, there is mortgage insurance once you hit that 80% loan to value, meaning you have 20% of equity in your home. So this program upfront, no mortgage insurance. The great thing about this program as well is, the student loan debt. That's going to be a huge thing when, as anyone has gone into college, student loans is a big issue. With this type of program, we don't have to consider your student liabilities, and we only look at what is going on your credit report. So if you guys are paying for any credit cards, any car payments, or you have any other personal loans, those are the only items we're going to consider. The student loans, it's bye-bye. We're not going to have to see them or consider them at all.
Wow, this is a great program because we're giving those in the medical degree with the medical degrees a lot of advantage to be able to purchase a property, right? Yes.
Most definitely, most definitely. And the good thing about this program as well, you can have a co-signer as well. So let's just say you don't feel comfortable qualifying by yourself. You can most definitely add another individual, help you guys qualify. Keep in mind they can contribute up to 50% of the total income. But it is a great program to utilize as well if you're looking to get in the home buying, getting started with your home buying right after college, or let's just say you already have been a doctor for a while and you want to take advantage of saving your funds. This is a great program to utilize. To go in with nothing on a property.
I have a question for you. So, can someone that's already a doctor, for years or whatever, buy a second property with this, or this is just for first time?
So you don't have to be a first-time buyer with this program. So
Really?
that's a great thing. Obviously, it's only going to be primary, so that second, if they already own a property, then obviously, in the eyes of the bank, they're going to want to see that's going to be turned into an investment. But keep in mind, we're going to structure this one as a primary purchase. meaning you're going to be able to go in with that 0% down. You
Ooh,
do have
that's a good thing.
yes,
Mm-hmm.
you do have the option of putting that a minimum down if you like to, which would be 5%. It's very optional. If you do decide to go with that option, keep in mind you're going to be able to qualify for slightly higher since we're able to use more of your guys' income, which is called the debt to income ratios. So that debt to income ratio will increase if we do decide to put that 5% down.
Oh, okay. Mm-hmm. That's good. That's good. So, to recap, hey, lots of great things. 100% financing, no PMI. Okay, so that's not an additional payment. There's student loan; they don't even look at that. Okay, and your FICO can be about 680. You can even have a second person to co-sign with you. Wow, that's great, or to qualify with you, right? Yeah,
Most definitely, most definitely. And the good
yeah.
thing about this program as well, we can do single units, we can do the condos as well. With your going back to your going back to um, for reserves as well. There may be reserve needed if you guys uh, do not put any down payment. At that point, there is going to be a 3 months reserve requirement. Let's just say we do put a down payment. At that point, there's no reserves needed for this type of program. Let's just say, for example, Soraya, many people, they don't have all the funds. The good thing is this program will allow for gift funds. So, meaning, let's just
Mm.
say you have a family member that does have funds. Let's say mom or dad or a cousin already has the funds at their account. Those funds can be sent over to escrow or shown to the bank that we do have reserves as a gift.
Wow. So I mean, you're giving all you guys are pulling out all the bells and whistles for people with medical degrees. That's a good thing. So basically, let me think about this. What's the minimum that this person needs to bring in? Then, if he can show gift funds. He can have a what's the minimum? What do you think?
So let's just go, for example, let's go simple math, go off of 500,000, for example.
Okay.
Usually closing costs are between 2 to 3%, usually overestimate, which is around that 3%. So we're looking around 15,000 for closing costs.
Oh, okay.
So let's just say we already have the reserves from gifted. The down payment is obviously already covered. We only have to worry about that 15,000. The good thing as well, we're able to get closing costs with this program. The max we can get is that 3% for this type of program. So it's a good thing as well. So meaning that closing costs can be covered by the seller. So you're not coming in with nothing, and at that point you're buying a home for free essentially. Um, at, in short run, you're going to be saving funds. Long run, you are going to be saving funds as well because you're going to have reserves. You're going to have extra funds if you do, and it's a great program, I would say.
Hey, so who do you know that's in the medical field that has a medical degree or is a medical resident, fellowship, fellows or intern? Hey, direct them to us. Okay.
Most definitely, most definitely. And a good thing,
Mhm.
another thing I would mention as well, some of these doctors may be self-employed. We do accept those self-employed doctors that only receive that 1099 and are not on salary. We can also help them qualify for this type of program. Let's just
Okay.
say, they don't want to go this 100% financing route. We can always go into this bank statement loan as well. Uh,
Right.
bank bank statement is reviewing your last 3 to 12 months of bank statements, reviewing the deposits, see how many deposits you have for that long course, 3 months to 12 months, and then we can calculate you guys' income on that way. Why is this beneficial? It's very beneficial for the self-employed clients. Besides, being a doctor, there's your contractors, other businesses that you know don't want to pay Uncle Sam all that money that they made early on that year. So this is a great way to get out of going to the tax route and going more creative financing with this bank statement route. So the good thing with this program, you can put a minimum 10% down for let's just say for a property that's worth 500,000. That's looking at 50,000 for that down payment. We would need
Mhm.
a 700 FICO score. Anything below that, it would require a higher down payment, but it's okay. The
Okay.
lowest we can go is a 660 for this program. Sorry, 600
Okay.
program.
Like 600? Did you say
Yes,
600?
yes. The
Wow,
lowest we can go is
really?
600. It would require a 20% down payment, but
Yeah,
keep in mind is more creative financing. Why? Because we're not reviewing
right.
any taxes for
Mm,
you guys.
yeah, yeah. Okay, cool. Hey, this is a good program too. Yes.
Yes.
What
The
else do you
good thing,
have for us? Mm-hmm.
it's very well off with this program just because, once again, there's no mortgage insurance on this program. So if your main concern is that monthly payment and you want to know if you're going to be paying mortgage insurance for the entirety of the loan or for a portion, the good thing with this program is that you're not going to be paying for no mortgage insurance for the entirety of the loan.
Yes. Oh, okay. That's a good thing. That's
Yes.
a good thing,
And
right?
then with all three programs, the great thing after you guys' sixth payment, you guys are able to refinance if the market allows us. Like mentioned before, it does look like rates may be on more on the decline based on the reports that we see. Even though they're a little more contradicting within the Fed, within themselves, that's okay. It's the other economy reports are coming in as expected, which is showing that the market is doing its thing, and it may seem that the rates are going to go on a decline um, later down this year.
But how seasoned does the loan have to be for you to refinance? Like if you just, you just closed, you close the transaction, you close escrow, and
Mhm.
then on a sudden the rates go down. How seasoned does it have to be?
So yeah, so each bank is going to be very different. Let's just some bank for these grant programs, they're going to be more restrictive, so they're going to have want you to wait those six payments
Six
uh,
payments. Got it.
for those grants to be forgivable. Let's just say
Right.
you decide to refinance beforehand, before that sixth payment. At that point, yes, you're gonna have to pay back that money because it hasn't been seasoned.
Ah, okay. Okay, I
Yes,
see. I see. I see.
but
Okay.
certain banks they will let you refinance right away, just depending on what type of program you purchase your current home with. Other banks will mandatory have you wait those 6 months of payments.
Months. Okay. Sounds good. hmm Okay.
Yes. So, are these three programs the right programs for you? Maybe they are, maybe they're not, and that's okay. We're here to help guide you guys and put you guys on a game plan on your financial goals. See what's going to be the best route to accomplish your homeownership uh, goal.
Okay. Yes. So, I mean, just to recap again, we have the forgivable grant, which the down payment, it gives you the down payment to help that may not require repayment. Okay. We
Mhm.
have the bank statement loan, which the income is verified via bank records, not pay stubs. That's a good thing.
Correct.
And then we have the doctor financing program, which is a special loan tailored for medical professionals. We have some great products here. So,
Yes, yes, most definitely, and let's just say we are. I get this question a lot. Like I'm a nurse, but I want to qualify. I see there's 100% financing for the medical side. With this program with 100% financing, going back to it, only one CRNA, CRNA with a DNAP or DNP degree will be able to qualify for this loan. Let's just say, I'm still a nurse and I still want to qualify for another program. It's okay. We still have those grant programs that we mentioned. You can still be able to qualify for that free money, or we can go with a regular down payment assistance. So that's our goal. If that's not our goal, we can always do a regular FHA loan, or we can get other loans as well, other loan programs as well for you guys, just depending on what is your goals and what you guys need, um, what you guys need to be able to qualify.
yeah. So, who do you know? Tell them to call us. Okay.
So
Yes.
little tips as well. What is the best thing to best takeaway before you go into the home search is knowing your different options. So knowing that there is grants out there, knowing there's 100% financing program out there for you guys. If we're self-employed, just know we do have different options. Either reviewing that bank statement route, or we can go FHA route if our taxes are in a good position. If not, we can do creative financing for you guys and provide different options for you.
Mhm.
One tip I would say before we go into the home search as well is assessing the credit portion. So the biggest
Yes.
thing is, where is my FICO score? A lot of people don't know where the credit score is at and don't know where to see your credit score. So the good way you can go see it is, one, downloading the Experian app. Right there, you can log in, make a free account, and see where you guys stand on a monthly basis. You can log in every day if you guys would like to. I wouldn't recommend it, but once or
Mhm.
twice a month, you can go ahead and check it out. Another option you can do is go to your guys' banking app. So depending who you guys bank with, majority of the time they will show what's called a Vantage score. So a Vantage score is an estimate of where you guys' FICO score is at, and we can most definitely go based off that and see where you guys stand instead of running credit right away, because some people are scared of that right away. You can always just look at you guys' Vantage score or just look at your Experian app to see where you guys stand and give you an estimate of where you guys stand.
Right.
Another good alternative you guys can do as well is go on the annual free credit report.com. Right there, you can go and obtain a free credit report from Experian, from Equifax, and TransUnion once a year. So let's just say you guys want it's ready in summer. You can go ahead, log in, get that report, and see where you guys stand on your credit report, and see if we're able to qualify based on those items. That way, we don't fully verify your credit right away.
So, do you know if they check their own credit score or their credit? Would that be a ding or something, or is that an inquiry or no?
So
Because
it's going to be considered as a small inquiry for those portions. So like credit card, every time you check your score in Credit Karma, it is a small inquiry. So it's going to show on your credit report, but it's not going to affect it as much. Same thing with the free annual credit report. It's going to affect very little just because it is a small inquiry.
oh,
With
okay,
Experian, there's no going to be no effect just because it's directly through them, and they're more lenient when it comes to that as well.
okay,
Yes.
yeah, okay. So our last takeaway would be to consult an expert. Our team can help you navigate these options and find the perfect fit for your unique situation. So, yes.
There's so many different situations, different scenarios. So don't be scared and say, I don't think you can help me. There's many scenarios out there. I've seen it all. So it's okay if you don't believe it, like we're not ready. It, all it takes is a simple conversation via call, via text, or you can even do a Zoom meeting or meet in person. So
Yes.
keep in mind there is options out there. Don't feel like there's nothing out there, because there is. There's always a way. Like I always say, if there's a problem, there's always a solution.
Yes. What I love about Saul is that he is very creative, thinks out of the box, and every situation is not the same. It's not a cookie cutter situation, right? So
Yeah.
he looks at it so differently and he fits whatever options are best for you. So give us a call. Give us a call.
Yes. So
Yes.
give us a call. Our contact information is up here. Let's go back to it. Feel free to call us. This is our personal cell. If you guys want to DM us via Instagram or Facebook, feel free to reach out through there as well. We'll always be looking out on those messages. And yes, if you guys have any questions, feel free to comment right now.
Yes. Yeah, so put your questions in a comment if you'd like them to be answered also. And if you want to be called, just leave your number. Okay, so you can reach us through the Instagram as well as our cell phone numbers are there. So until next week, okay?
Yes, next week, same time, 7 p.m. I know everyone is watching the World Cup. Everyone's caught up with the U.S. game. But
Yes.
if you guys are interested in starting your dream of buying a home, whether it's your first home, your second home, or just trying to get more knowledge, hop on next week. We have different. We talk about different options, different programs, different tips of how you can get started and accomplish your guys' goals.
Yeah, we have a program for you somewhere. Okay. Bye-bye.
All right, then,
Thank,
guys. Well, with
thanks for
pleasure.
tuning
I'll catch
in.
you guys next week.
Bye-bye.